This is Larry Williams, a trader that has a multi-million-dollar net worth. However, what is interesting about Williams is that he was able to take $10,000 and turn it into over $1.1 million in just 12 months, meaning that he had returns of over 11,000%. In today's video, we will be going over and showing you the exact indicators, strategies, and trading methods that were used by Larry Williams. The most common strategy that is referenced when talking about Larry Williams is the LW volatility breakout strategy. This is a strategy that is based on the highest and lowest prices of the previous trading day. Let's first add an indicator to the chart. Navigate to the Indicator Search tab and search for the Donchian channel indicator. Select the indicator made by TradingView and add it to the chart. Before we change the indicator settings, let's first properly understand what the strategy is. This strategy is based on the LW volatility breakout strategy. When using the strategy, we'll be looking to enter into a position based on if the price breaks above the low or high of the previous day. If the price rises and breaks out above the previous high, our bias will be bullish. However, if the price breaks below the previous low, we will have a bearish bias. Since we are looking to scalp or day trade, we will be using a modified version of this strategy by using the Donchian channel indicator. Now that we know the basics of the strategy, let's change the indicator settings. Navigate to the Indicator Settings tab and click on the Inputs tab. Here we will first be changing the length of the indicator. Since we are using the 5-minute time frame, we will be changing the length to 96. We change the length to 96 because if we multiply 96 by 5, we get 480 minutes, which is equal to 8 hours. This means that on a higher time frame, for example the 15-minute time frame, we would change the length to 32, since if we multiply 15 by 32 we also get 480 minutes. Keep in mind that if you increase the time frame even further to, for example, the 1 or 4 hour time frames, the calculation no longer makes sense and a default value of, for example, 20 should be used. Now that we have changed the length, we can see that there is also a multi-time frame option for the Donchian channels indicator. However, we won't be using this setting. Instead, let's head over to the Style tab. Once you have changed the length, we will be changing the colors of the upper and lower lines to a lighter blue in order to make them easier to see. That was all that we needed to do. Let's first understand how we will be reading the indicator. The Donchian channel indicator consists of 3 lines. The first of which is the middle line, also known as the median line or the center line. This line represents the average of the highest high and the lowest low over a specific period. It acts as the baseline for the indicator and helps determine the overall trend of the market. The second line is the upper band, which is plotted above the middle line. The upper band can serve as a resistance level, however, it can also indicate potential breakouts if the price breaks through it. Conversely, the third line is the lower band, plotted below the middle line. The lower band acts as a support level, however, just like with the upper band, it can act as a signal for a breakout if the price breaks through it. Now that we know what the components of the indicator are and how they can be read, let's take a look at how entries can be made with it, before looking at a full strategy to enter into positions with. The first method for entering into positions with the indicator involves looking for crosses where the price action closes below or above the middle band. In this case, the price action closed above the middle band. This indicates a possible bullish shift in the market sentiment. On the other hand, we can see here that the price action crossed below the middle band of the Donchian channel indicator. This indicates a bearish shift in the market sentiment. This strategy already seems to provide good signals. However, we will be using a different method that closely resembles Larry Williams' volatility breakout strategy. Here we can see that the price action was in a longer-term consolidation phase after a strong downtrend took place. However, we can now see that the price action made a strong move in the bullish direction. This meant that the price hit the upper Donchian channel band, causing it to change. Because of this, the bias has become bullish and we will enter into a buy position. We will be placing the stop loss at the middle band, or at the recent swing low if the middle band is at an unreasonable price. For the take profit, we'll be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. In this case, we can see that the price was previously in an uptrend. However, we can now see that the price has started heading in a downward direction. We can also see that the price reached the lower Donchian channel band, causing for it to change. Because of this, we will be entering into a sell position here. As you can see, this time the middle band is at an unreasonable price. Because of this, we will be placing the stop loss at the recent swing high instead. For the take profit, we will still be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. From the 2 example entries, we can conclude that this indicator already allows us to enter into profitable positions. Despite this, if we look at the entries that weren't profitable, we can see that this is usually due to the price action signals not aligning with the signal that was given. We can see this happening here. The price reached the upper Donchian channel band, however, it wouldn't have been a good idea to enter into a position here. This is because we can see that 2 potential resistance zones were formed here. If we mark these 2 resistance zones, it becomes clear that they are very close to the entry point, making it a bad idea to enter into the buy position. If we take a look at how the price action unfolds, we can see that it would have indeed been a bad idea to enter into a position here. Another drawback of the indicator is that it doesn't consider trends. In this case, we can see that the price is consolidating, which causes the Donchian channel lines to become narrow. When this is the case, very small moves in the price action can already cause the price to reach the upper or lower Donchian channel lines. In order to counter the false signals that are provided by the indicator, let's add 2 extra indicators to the chart. But before that, if you are looking for a crypto exchange where you can hold or day trade crypto, then check out Bybit. They currently have some of the lowest fees along with many trading possibilities such as spot, derivatives, NFT, and even options trading. Sign up via the link in the description to get up to a $30,000 sign-up bonus along with zero maker fees for the first 30 days. The first indicator we will be adding to the chart is the Larry Williams Large Trade Index, also known as the LWTI, which was explained by Larry Williams in his book, Trade Stocks and Commodities with the Insiders, Secrets of the COT Report. Navigate to the Indicator Search tab and search for the Larry Williams Large Trade Index. Select the indicator made by Locks and add it to the chart. The next indicator we will be adding to the chart is the volume indicator. Search for the volume indicator. Select the indicator made by TradingView and add it to the chart. Now let's change the settings of the indicator. First, head over to the LWTI indicator settings and click on the Inputs tab. The first setting that we can change is the period of the indicator. By increasing the value of the period, we can capture longer-term trends and potential trade signals. As you can see, if we increase the value significantly, a longer-term LWTI line is shown. Conversely, decreasing the period value can make the indicator more sensitive to short-term price movements. Now that we have decreased the value, we can see that this is indeed the case. Since we want to use a value that shows us the midterm trend and filters out counter-trend signals, let's change the value to 25. The next setting that can be changed is for the smoothing of the indicator. If we enable this setting and increase the smoothing period, you can see a clear difference. The LWTI line has become smoother, however, this has caused for the signals it provides to be delayed. Because of this, we will keep this setting disabled. There is also the colored bars setting. If you prefer having the candlesticks colored and displaying the signal of the LWTI, you can enable this setting, but keep in mind that this is a matter of personal preference. The final settings we will be changing are for the volume indicator. Navigate to the volume indicator settings and click on the Input tab. Here we will be changing the length of the moving average to 30. Now head over to the Style tab. We will need to enable the volume moving average line. Finally, we will be changing the color of the indicator line in order to make it easier to see. That was all that we needed to do. Now let's take a look at how we will be combining these indicators in order to enter into a position. We will first be using the Donchian channel indicator to provide us with a signal of whether we should enter into a position. In order to confirm the signal provided by the Donchian channel, we will be taking a look at the LWTI indicator. If the indication provided by the LWTI aligns with the signal provided by the Donchian channel indicator, we will consider it valid. However, before we can enter into the position, we will need to make sure that there is enough volume in the market. In order to do this, we will be using the volume indicator. This combination allows us to assess price action, market sentiment, and liquidity, providing a more comprehensive view of market dynamics and enhancing the accuracy of our trading decisions. Now let's take a look at how we implement this and enter into positions by using these indicators. In this case, we can see the following. First, we can see that both a support and resistance zone were created here. Let's first mark the support zone to make it more visible. To do this, we will be using the box tool on the left toolbar. Now that we have marked the support zone, let's mark the resistance zone. Now that we have marked both zones, we can analyze the price action. We can see that the price previously broke above the resistance zone, indicating that the zone can be broken through. However, it may provide some resistance. If we take a look at the current price action, we can see that the price has broken through the resistance zone. We can confirm this because we can see that multiple candlesticks closed outside the zone. Along with this, we can see that the price reached the upper Donchian channel band, causing it to change. This is a signal to enter into the buy position. In order to confirm the signal, let's first take a look at the LWTI indicator. As you can see, the LWTI indicator line recently crossed above the 50 line and switched to green, indicating that the market sentiment has switched to bullish. Finally, in order to confirm that there is enough volume in the market, we turn our attention to the volume indicator. We can see that the indicator bars are green and above the moving average, showing us that we are no longer consolidating and that there is enough bullish volume in the market to push the price higher. If we combine all of the signals provided by the price action, Donchian channel, LWTI and volume indicators, it becomes clear that it's a good idea to enter into a position. Because of this, let's enter into the buy position here. We will be placing the stop loss at the middle band since it is at a reasonable price. For the take profit, we will be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. In this case, we can see the following. First, we can see that a previous low was created here. Because of this, let's draw a box here to show that this zone might offer resistance. If we look at the current price action, we can see that the price action didn't easily break through the zone. Instead, the price consolidated for a few candlesticks before heading in the downward direction, confirming the bearish bias by printing a large red candlestick and closing below the zone. We can also see that this move caused for the lower band of the Donchian channel indicator to be hit. This means that the lower Donchian channel line has now changed. Along with this, if we look at the LWTI line, we can see that it recently switched from green to red, also indicating a bearish bias. Finally, we can see that the bars on the volume indicator are greater than the moving average. Along with this, the bars are red, indicating a large amount of bearish volume in the market. Because of the confirmation provided by the indicators, let's enter into the position. Since the middle band is at an unreasonable level, we'll be placing the stop loss at the recent swing high. For the take profit, we'll be targeting a 2 times risk to reward ratio. Now let's see how the trade plays out. As you can see, extremely profitable entries can be made by using the indicator. As you can see, the strategy also provides great signals when we combine the Donchian channel indicator with the previously discussed settings together with a premium indicator. In this case, we can see that by looking at the relationship between the price action and the Donchian channel and combining it with the buy-sell signals and overlays indicator by Lux Algo, we could have entered into extremely profitable positions. If you are interested in getting access to the Lux Algo premium indicators, check out the link in the description to get them with a 30-day money-back guarantee. I hope this video could show you what a strategy based on Larry Williams' techniques would look like and how you can integrate his techniques in your own strategy. If you enjoyed the video, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.